Internal Revenue Service IRS Tax News. Financial safety, the often forgotten piece of disaster preparedness. IRS Tax Tip 2021-115, August 9, 2021. After a natural disaster, having access to personal financial, insurance, medical, and other records can help people starting the recovery process quickly. There are a few things taxpayers can do to help protect their financial safety in a disaster situation. Here are some financial preparedness tips. Update emergency plans. A disaster can strike at any time. Personal and business situations are constantly evolving, so taxpayers should review their emergency plans annually. So obviously we put the emergency plan together and then we let it sit there until the emergency happens or until we update it. And typically we want to make sure that we update it on a basis annually, at least here, so that we can have the plan that would be relevant given the emergency at that particular time. Create electronic copies of documents. Taxpayers should keep documents in a safe place. This includes bank statements, tax returns, insurance policies. So obviously these days, a lot of the documentation, more of it's going to be online, so you might actually have access to at least some proportion of your financial data with regards to bank statements and so on. However, if what you're using those for, the bookkeeping process of the financial statements and any kind of documentation that, of course, is going to be more permanent type of documentation, then those are also going to be things that you are going to be storing. Usually, it used to be that we, of course, would store those in some kind of folder or something like that, which in the event of a fire or a flood, then we could lose those. Now we have the online storage, which, or the computer storage, which we could still lose if in the event of a flood or fire, we just have it on our computer. But we can also store that stuff on the cloud now, of course, and that's going to be the other huge option. You got to be dealing with making sure you're in compliance with any kind of security problems that could happen if you're storing data on the cloud. But that can obviously help a lot in the event of a disaster to recover your data if everything burns down or flood happens, computer dies, hard drive's gone. But you can just hopefully get a new computer at some point, or your phone, or a new phone maybe, or something like that, and then you can access it if you can get access to the internet, to the internet. This is especially easy now since many financial institutions provide statements and documents electronically. If original documents are available only on paper, taxpayers can use a scanner and save them on a USB flash drive, CD, or in the cloud. So if you do have some of the documentation that's still going to be the original documentation is a paper documentation, and then you might take the scanner even on your phone. There's scanners, not just a picture, but it can actually scan with the phone, and then you could scan it in and save it electronically, or at least save a copy in that way as well. So documenting valuables by taking pictures and providing them before a disaster strikes make it easier to claim insurance and take benefits if necessary. So you want to have the documentation of, say, in the event of a flood or a fire or something like that, the possessions that you have so that you can replace them for if you're doing an insurance claim. So you want to take the pictures, have all the information listed on what the items are in the event of a disaster. IRS.gov has a disaster loss workbook. There's a link to that workbook here that can help taxpayers compile a room-by-room list of belongings. Understand tax relief is available in disaster situations. So information on disaster assistance and emergency relief for individuals and businesses. There's a link to that here, and it's available on the IRS website, irs.gov, irs.gov. Taxpayers should also review the itemized deductions for casualty and theft losses. There's a link to that here. Not personal casualty and theft losses are deductible only to the extent they're attributable to a federally declared disaster. So fairly recently, they kind of restricted, how much you could take on the losses or the availability of the losses, in essence, for the federally declared disaster. So if you're in that federally declared disaster, more likely that the itemized deductions would be something related to you then. So claims must include the FEMA, F-E-M-A code assigned to the disaster. Taxpayers who live in a federally declared disaster can visit Around the Nation. There's a link to Around the Nation here on irs.gov and click on their state to review the available disaster tax relief. Those who live in counties qualifying for disaster relief receive automatic filing and payment extensions for many currently due tax forms and don't need to contact the agency to get relief. So people with disaster-related questions can call the IRS at, and there's the number here. I'll say it just one time here, 866-562-5227. There'll be a link to this in the description if you want to look that number up. I said it too fast here and you want to look it up. So to speak with the IRS specialist trained to handle disaster issues, they can request copies of previously filed tax returns and attachments by filing Form 4506, order transcripts showing most line items through Get Transcript on, there's a link to Get Transcript, on IRS, or call 800-908-9946 for transcripts. There's more information at these links below that you can take a look at, including Publication 584B, Business Casualty Disaster Theft Loss Workbook, Publication 547, Casualties, Disasters, and Thefts, Publication 5307, Tax Reform, Basics for Individuals and Families, and Publication 583, Starting a Business and Keeping Records. There's links to that wonderful reading information here, and there'll be a link to this in the description